Hello, my name is Dan Shea, and what I'd like to do is have a brief video here of seller financing, financing properties without banks for income properties. Now, I call my income properties colonies, and I'm very specific on the type that I'm looking at. A colony for me is 5 or more units on a single parcel. Now, these units could be single family houses, duplexes, converted garages, legal non-conforming type buildings. But the reason I like those properties is they're going to be purchased in a sort of rundown condition. And with 5 or more units, you can't get a traditional loan at a bank. You have to get a commercial loan, and they will not loan you money for a commercial loan on this type of property. Therefore, the sellers usually know that they have to carry the seller financing. And I'm going to give you some reasons here why this is my very favorite type of financing and why it is so beneficial. In this short presentation, we're going to cover the best source of financing available is from the seller. Now, remember, we are not talking about single family homes that you can easily go to the bank and get a loan on. We are talking about slightly unusual properties, colonies, 5 or more units on a single parcel. Now, we'll go over why the sellers have to carry back the financing, negotiating with the sellers. We'll give you a few special tips to use, some techniques, and some more benefits of seller financing. Now, this figure surprises a lot of people because they think that getting seller financing is unusual. Many agents will say that that's not available anymore. It used to be available in the 1980s, but not today. That is not true. In most of my properties I bought over the last several years, this type of group houses, the colonies, 85 to 90% have been from seller financing. Now, keep in mind also, when I sell my properties, I want to give seller financing to the new buyer. It's beneficial to me, and you will see some of the benefits here shortly. And if I don't take back the financing, I would do a 1031 exchange trade that we're not going to go into in this presentation. Why seller financing? Contrary to what you hear, it is always available. It's almost always cheaper than going to a traditional bank. Let me get that glare out of there. It's always more flexible than the bank because the banks have lots of regulations and terms and charters. Sellers give the best terms, and the best terms are what you negotiate with the seller, not the product that the bank has to sell you. An excellent buyback opportunity. I'll only touch base on this for a minute here, but it's a gold mine. A buyback opportunity is this. Let's say you get seller financing from somebody selling a property a couple years ago. You've been making monthly payments, and you come to them and you say, "Hello, Joe or Jane. I just came into a little bit of money, and I want to know if I can buy back your loan." Let's say it's a $50,000 loan. I'd like to buy back your $50,000 loan for $30,000 cash this week. Wow. Now you say, well, why would anybody sell a $50,000 note for $30,000? And think about it. If you had 1 or 2 kids going to college or about ready to go to college and you're a little bit low on cash, those monthly payments that you're getting on the mortgage aren't as beneficial to you as a chunk of cash. Or you might be going through a divorce, or you might be retiring. There's lots of reasons why you may take back this kind of note. And when you do it with a seller, it's very profitable. Just keep that in mind as an extra bonus of seller financing. Seller financing almost always requires you to have a one-on-one sit down with the sellers. They want to know who you are and why they ought to be talking to you. Now, keep in mind that real estates work hard against this happening. They really don't want you as the buyer to be sitting down with the seller and mess up their deal. understandable, but you know what you're talking about and you want to know what makes that seller tick. And it's your job to explain to the agent that you'll only sit down with them for X amount of time, find out what you need to do, you leave the room and give it back to the seller. Hugely beneficial. Now, a couple things to realize when you're negotiating with sellers. Recognize that there's people and their desires that are at stake. Yes, of course, the subject here is the property. That's what we're talking about. But the discussions that you're talking about in working on this seller financing, that becomes very personal because you're trying to find out what makes that seller tick, what he needs, and what you need to do to put together a deal. Now, here's an example situation, probably pretty typical. You have an older seller. He wants to sell this type of property. Remember, we're not talking about single family houses or duplex, typically 5 or more houses on a single property. And they're going to be a little bit run down. If they're already fixed up, we don't really want them because we can't create benefits. So when we're talking about this seller, he's got 5 or more units and they're either run down a little bit or mismanaged. He wants $100,000 for the sale. And he plans to put that money in the bank and draw $700, $750 a month to support his retirement income. Pretty simple. Now, when you're sitting down with the seller, you say something to the effect of, Mr. Seller, let me understand what you're trying to do. And I'll read this as if I was speaking to that seller. You plan to put $100,000 in the bank and draw out $750 each month to supplement your retirement. Now, do you know how long your payments will last? Most sellers don't know that, so I tell them, and I've written that here as 17 years. Then I say, Mr. Seller, if you'll finance that $100,000 with me, I'll pay you $750 a month, including whatever the interest rate is. I'll say 7.5% interest here. Do you know how long that will last? I will tell them 26 years. Which do you like the best? The way that you plan to do it and your money's going to last you 17 years, and the way I do it, it's going to last you 26 years. Now, a lot of times sellers may want to do business with you, but they aren't sure quite that they want to do business with you, or they don't know enough about you. In this situation, I will share my financial documents with the seller. Typically, I will do this at a escrow office. They can go into a room, look at all the documents I give them. They leave the room, they give me back the documents. I do not give them the documents to take home. I will show them a profit and loss statement of my rental business, what my rents are, expenses, etc. I will give them a schedule of the real estate I own and the mortgages that I pay on those properties that I own, with addresses, amounts, and the phone numbers of people that I own. And they're welcome to call those people. Now they can thoroughly check me out to determine if I'm a good risk. And once again, if they're still not satisfied, I still have another thing that I can offer them, and that is additional collateral. This is a simple concept. I say everything else looks okay, but you're not sure about taking back the financing just on the collateral of this property that you are selling. And I say, I have an extra house or a duplex or a triplex over here, and I will put that up as additional collateral on the property that we are buying right now. And what I do is I put that as collateral towards the loan on this property that we're trying to buy. But I say to him, I will put that on there as additional collateral for, let's say, 4 or 5 years. And after I make monthly payments on time for those 4 or 5 years, that additional collateral on that extra property just disappears. And we go back to just making the payments, but there's no additional collateral. Very powerful when you use these with a seller. Now, one of the things that you'll really notice when you do a deal is benefits are usually more important than the money. Now, everybody says, well, I need the money, but think about it. Speed and timing, how fast you can close, is a very powerful tool. Let's say they're selling a property that has wild tenants from hell. You can imagine tenants are running the monkeys are running the zoo, the tenants are running the property. You have minimal control. You're not a manager. You have headaches. They're not paying you. They're trashing your properties. Yes, money is good, but if you could take that off my hands very quickly, you have something good. Let's say they are selling or going to the hospital or long-term care facility, divorce, maybe in jail. Learn the hot buttons. These are very important, and most of the time, it's not always the money. Now, one of the best negotiating tools I can tell you about in negotiating with a seller is what I call an income property analysis form. It's a common tool, and you fill this out, and these are the figures and the expenses and the income that you put on this form from the seller, and you can both sit down and review it. You can't really make offers without the proper information. Now, we won't go into a lot of detail on this form, but let me show you what you can get. I'll give you the link in a minute, but you must have this online calculator. Now, it's a free online calculator. You type in the rents and the expenses, and the calculator then shows you how much you can pay for your new seller finance mortgage. You'll put in rents, expenses, the amount that you pay for current mortgages that are already on the property that you are buying, and the calculator will automatically come out with a bottom line figure of the amount of money that is left over from that property after automatically deducting certain percent for maintenance, certain percent for expenses, certain percent for vacancies, etc. The calculator will do that, and it's a really an absolute must, and carry this calculator with you everywhere. One of the benefits of this calculator is not only looking at the property that you are trying to buy, but on other properties that you're trying to buy, it will help you quickly determine properties that you should not be looking at. In other words, properties that aren't going to make money in a short period of time. It saves you a tremendous amount of time. Now, if you click on this or go to it, I've shortened up the link. It's bit.ly/income analysis form. It's free. You can use it, and it'll definitely help you when you're working with a seller trying to get seller financing. As demonstrated here, seller financing is much more beneficial than bank financing. So much more beneficial. Thank you from Dan Shea, and I look forward to seeing you in future videos.